Hey everyone, welcome back to the channel. So I've been doing a lot of changes to my portfolio this year, in the last couple of years, right? I share them with you every single month in my portfolio unveil video, which you could look at the Excel file, which you could download for free on my website. This is the main portfolio, even in the retirement accounts here, in the RSP tracker tab, I've been doing some changes. So this has prompted for some comments similar to this here. So this is a recent comment on my last portfolio unveil video. Constant rotation with no rationale and doing promo sponsored videos for living. Behind the scene, we don't know. I like him. Well, thank you. But constant rotation is worrying me. And then you have a response here. He is certainly not a buy and hold investor, which is what an income investor should be. So I've been getting a lot of similar comments like these and concerns, right? So I talk a lot about buying and holding, being a buy and hold investor, but it seems like I'm doing all these changes or rotations, which I agree with, obviously, not a crazy amount. And the part I do disagree with this comment is with no rationale. I think I give a really solid reason for every single move that I do. This is why it's important to watch and listen to the entire portfolio unveil video. Of course, if you don't, you're not going to catch the reasoning as well. Sometimes I even do a dedicated video for a big move that I make. But anyway, regardless, I think some of you are maybe wondering, what's going on? You're supposed to be a buy and hold investor. You're making all these changes. So in today's video, I'm going to go over why I've been making these changes, the main reasons you or anyone could make changes in their portfolio, how that's not a bad thing, and am I still a buy and hold investor? What does buy and hold actually mean to me? How should you interpret that buy and hold phrase? Let's get into it. Before we continue, I'd like to thank the sponsor of this video, Mumu Canada, who is a newer broker here in Canada, which is always having some specials, some offers for new accounts. So make sure to use my referral link, which is in the video description below. They're having a special here, a promotion till end of August, where you could actually earn 6% interest on your cash. On top of that, up to $2,200 of trading perks. They're also running another promotion. If you're transferring from another broker, you can get bonuses as well. So I'll put all these links in the video description below. Just don't forget to open a new account, use my link, because with my link, on top of all these bonuses here, you could get access to a $30 Amazon gift card with only a $1,000 deposit. So my opinion, try it out. Open a cash account, try out the broker. You could deposit $1,000 just to test it out. You'll get that $30 Amazon gift card, as well as these other perks here, and see if you like it. So again, thanks Move for providing that extra perk, and make sure to always use the link in the video description below. So guys, let's go over really 4 different reasons or you would actually make changes in a portfolio, or really why I've been making changes in my portfolio recently. I got it down to 4 categories. The first one is your investing style or strategy could change, right? So lately I've been trying to streamline my portfolio, right? If you have less holdings, it's easier to manage. So that has to do with investing style. Some people like a lot of holdings, a lot of different ETFs from different providers, even though they have the similar strategy, similar stocks. I like to have a more slimmer, streamlined portfolio. At the beginning, I had a lot of holdings, right? 120. Go back to my first portfolio in Unveil, I was all over the place. Single stocks, single REITs, closed-end funds, split funds, covered call ETFs, leverage, not leverage. I was all over the place. But with time, your investing style and strategy will change over time as you evolve as an investor. So why wouldn't you make modifications to your portfolio, right? So I'll give you a few examples, right? The streamlining, lots of examples here. We'll stick with the retirement account. I had a bunch of the single yield max ETFs streamlined into the all-in-one YMAX that came out later, right? Made a bunch of streamlining moves throughout the years. And every time I tell you guys, what I've done and the reasoning behind them. Maybe when it comes to style or your strategy changes, well, maybe a new fund comes out that you like the strategy better. So for example, JPY into SPY-T, QQQY into QQQT. I like those covered call strategies better because you capture more upside of the corresponding index. Then I decided my wife's account and my account, I'm going to stick with the NASDAQ 100. So I got out of SPY-T and went into QDTE. I wanted to have the NASDAQ 100 in both accounts as the primary equity position, because with AI and the Nasdaq 100 being more technology focused, I think I'll be better off. I have more growth with the Nasdaq 100 than with the S&P 500 over a long period of time. I ditched QYLD a long time ago because all these new great covered call ETF funds have come out with better strategies, in my opinion. I ditched CLM a while ago as well because I don't have access to the best perk of CLM as a Canadian to drip your shares at the NAV price instead of the stock price. Only select US brokers have that feature. I prefer leveraged options over non-leveraged options if I have the available option, right? So I, for example, switched my HMAX, great fund, Canadian financials with covered calls, high yield, no covered calls though. And I switched it to BKCL, and then I switched it to Bank eventually, which has similar stocks but has the leverage. I'll always take a leveraged version over a non-leveraged version if I have the option. I switch my Bitcoin BTCY to BTCY.B because I feel the Canadian dollar will probably get weaker over time, and I trust the USD currency over Canadian currency. So I just swapped that. So there's a million different reasons why you could make modifications to your portfolio if your style or your strategy changes. If something newer comes along, you like it better, why wouldn't you make the modification to your portfolio? Another reason could be your investing objectives could evolve over time. You get older, you're about to retire, your investing objectives could evolve. So the objective of my main portfolio is to deliver very secure, safe, stable income. So over the years, I've been getting away from single stocks, single REITs, even split funds, because those can miss or reduce their distribution, which they have. I learned that for single stocks and REITs. It was my big lesson learned in 2020, for example, going back to 2020, right? So I started to get away from those. Even split share funds, even though they have great performance, they're just designed in a way where they can miss monthly dividends. Some of them I've never missed, but things like DFN and LBS have missed dividends, right? So obviously, if your primary objective is consistent monthly income, maybe those funds are not best suited for your portfolio at that time, okay? Because I want to have income consistency, right? So that's your investing objectives could change. That's another category. Another category is your asset viewpoint could change. So when it comes to assets, there's really four, right? There's stocks or equities, there's fixed income, also bonds, and all that good stuff is in that fixed income category. Alternatives, things like REITs, closed-end funds maybe falls into alternatives, MLPs, art and hockey cards, all that crap falls into alternatives. And then you have cash, right? So my asset viewpoint has changed recently for me personally, where I've been getting away from fixed income and just going all exclusively in equities and stocks. Why? Because if I'm buying and holding for a long time, if not forever, I'd rather have the better performing asset, and stocks outperforms fixed income long term pretty much throughout history. So that's why I only have 1% in HPYT ETF from Harvest, right? Great ETF, high yield, but it's U.S. government bonds. It gives me ick investing kind of in the government. So I almost have none of that. I have only a small percentage in that. I got rid of my HYGW and the RSP, high yield corporate bonds with covered calls. I'm going to ditch RIV eventually. RIV has mostly fixed income assets in that closed-end fund. I ditched OPP, GOF, CEFD, a lot of these all-in-one closed-end funds, because most of closed-end funds on the US have mostly fixed income instead of stocks. So this is just another example. Another example I invested in BMAX, the Brompton all-in-one, but that has 70% equity, 30% in fixed income. I swapped it back to GDV, which is all stocks, right? So this is just personal. My viewpoint on fixed income is I don't need it, I don't like it, and I'll probably won't have much of it, if any at all, in the future, unless the fund really suits my needs and it's a good time to buy it. And HPYT does enter in that category for now. So your asset viewpoint could change over time too. Why wouldn't you modify your portfolio accordingly? I've been reducing my shares in Ethereum ETF because I'm realizing I don't really know much about it. Ethereum, don't really know what it is exactly. It has a lot of competition, whereas Bitcoin does not. And I understand Bitcoin a lot more clear. So I have more in Bitcoin than Ethereum, where it used to be 50-50. So I'm just giving you some more examples here. The fourth, and this is a big one, especially for me, your tax situation could change. My tax situation has changed drastically when I became a non-resident of Canada. The main implication for me is really the cash account, where I get all the in the cash account, I pay 25% withholding tax on all my dividends. But the following year, the portion that's ROC and capital gains I get back, but not the foreign income, regular income, and eligible dividends. So this is why I've been ditching a lot of my Canadian focus or things in my cash account that give a lot of eligible dividends. Things like HDIV, HDIF, FTN, DFN. I'm planning to get rid of RS as well. So these are examples where the funds are great. I love these funds. I was sad to see them go, but I can't get the eligible dividend portion. So these funds have some eligible dividends, DFN, FTN, it's all eligible dividends. That's really a disaster for me. So I've been getting away from Canadian focused stuff in my cash account to focus more on US stuff, which has very little dividends, if at all. Like the S&P, the NASDAQ index, they have very, very small dividends, if at all. And so it's going to be a lot more, mostly ROC and capital gains, which is better for me. Maybe not for you, but for me. Taxes really depends on your country, your residency status, your province, and your tax bracket. Some people in Ontario in a low tax bracket, eligible dividends are better than capital gains. Someone making $200,000 a year, capital gains is much better than eligible dividends. So again, it depends. It depends on your tax situation. So in summary, am I still a buy and hold investor? Do I still feel that way? Absolutely. I am still a buy and hold investor because when I buy something, I intend to hold it long term. What I feel the premise of buy and hold is you're buying a fund or an investment potentially to hold it forever. The intent is to hold it forever, long term, if not forever, and just live off the income and not touch the capital. That's still what I feel I am. I would just want to live off the income. But if my situation changes, my style changes, I become a non-resident, right? If something better comes along, a new fund with a better strategy comes along, if a streamlining opportunity comes along to simplify my portfolio, a new fund with a better strategy that I like better, if a leveraged version comes out, of course you could change your portfolio accordingly. It doesn't mean that you're no longer a buy and hold investor. I think you guys, we really shouldn't take buy and hold literally. I mean, come on, we don't live in Nazi Germany. We're free to make changes and make choices if we change, or if our portfolio objectives, or if our situation changes over time. It's very silly and irresponsible even, and a big mistake if you're taking buy and hold literally, and if your situation changes or your knowledge increases and there's a better fund out there that's better for your objectives, better for you personally, why wouldn't you switch? It doesn't make sense to me, right? So buy and hold shouldn't be taken literally, but I'm still considering myself a buy and hold investor. I'm still investing to just live off the income, never touch the capital, but it doesn't mean I can't swap into something else that's better and that still follows that mindset, right? So I hope I'm making sense here. I started with 100. You could go back on my channel, look at the very first portfolio and unveil. I had over 120 holdings, single stocks, single REITs, closed-end funds, split funds, covered call ETFs, leveraged one, non-leveraged. I was just all over the place. With time, experience, knowledge of, I've been streamlining, making changes. So consider it a good thing. Consider it a privilege. You guys know the privilege that we have to be able to open a broker, start investing. You think everyone in the world could do that and just start generating income? We have a privilege. Let's take maximum advantage over it. Let's not take anything literal. Let's evolve and change with time. If our mindset, we get older, our objectives change. You have kids, you don't have kids, that could be, things change, guys. So why wouldn't you modify your portfolio? Better fund comes out, leveraged version comes out. You like the leveraged version better. Unhedged, Happy T just released HPYT.B because people wanted the unhedged version. So swapping from HPYT to HPYT.B, that doesn't mean you're no longer a buy and hold investor. That means you're a smart investor that's changing with the time. So we can't be Luddites, right? Let's not be Luddites. That doesn't work. Got to evolve with time. So I do expect my portfolio changes to slow down drastically over time. I mean, I do have RS and RIV to sell off. I'm not in a rush to do that, but I explained why I plan to do that several times. But besides that, I don't really see much of more portfolio management or changes unless something changes or something new comes out, right? So again, everyone needs to focus on their portfolio. Don't focus on mine. Yes, I know a lot of you follow my portfolio and my moves religiously. That's fine. But this is why I take the time to explain what I'm doing. But remember, I'm doing things according to my situation. Yours could be different. So you got to figure out what's best for you. And don't take buy and hold literally. Need to change with the times if something better comes along. I think it would be foolish not to. So hopefully this video was informative. Give me a thumbs up. I would appreciate it. Let me know if you have any other questions, and see you next time.